Okay, let's get into it. We are doing a deep dive today, really looking at the future of Treasury leadership. We've got this really interesting report that focuses specifically on how the head of Treasury role is changing. And honestly, it's kind of wild.
It really is. So
Mm.
what we're trying to do here is unpack that transformation, figure out the skills the report says are becoming essential, and maybe get a peek at the future of finance more broadly, looking through that treasury lens.
And you should get ready because this report suggests the role isn't just evolving slightly, it's fundamentally shifting, like moving from managing cash by hand the old way to potentially orchestrating whole teams of AI agents.
It's quite a leap. We'll look at where the role came from, where things stand today, roughly 2025, and then dig into these pretty dramatic changes the source sees coming by the 2030s. It feels less like evolution, more like a revolution, really.
All right, let's start by grounding ourselves. Looking back, what did that head of Treasury role usually involve, say, in the 1990s, according to this source?
Well, based on this report, the 90s were all about manual everything.
Yeah.
Manually reconciling bank statements, literally phoning banks to find out your cash
He's
position.
loaning them.
Yeah.
Wow.
And working capital, mostly managed on spreadsheets. Raising debt, man, phone calls, maybe even faxes to your relationship banks. FX hedging was, pretty basic. The systems were simple too. Lotus 123 maybe, early Excel, compliance. That was usually a month-end report.
Hmm.
Strategically, it was very operational, focused on keeping the cash safe. Very hands-on.
Okay, fast forward to now, around 2025. What's the big change the report highlights for today?
So now we're definitely in the automated and platform phase. You've got automated dashboards showing real-time cash globally, clever cash sweeping setups, moving money automatically, plus ERP systems like Oracle or SAP giving integrated analytics for working capital.
And the banks, how do they fit in?
Integrations are much more API-based. So systems talk directly, less manual file shuffling. Debt raising happens via syndicated markets, digital platforms. For FX and risk, you've got real-time VAR, CVR dashboards. Treasury systems themselves are often cloud-based. Sosting, Kiriba, SAP TRM, Travada. Compliance is also shifting towards real-time monitoring. And the strategic role, it's broadened. You're a key risk allocator, a much more sophisticated funding strategist. It's a big step up.
Okay, now for the really interesting part, maybe the bit that feels like science fiction, what does the source predict for the future looking out to the 2030s? What kind of tech takes over?
Right, this is where the report really leans in. The vision for the 2030s is heavily focused on predictive AI, autonomous systems, agent-driven processes, and the Treasury head becomes more of an orchestrator. So instead of just managing cash day to day, cash flow becomes predictive using AI. It anticipates needs. And then you have autonomous agents like specialized AI assistants managing routine inflows and outflows on their own.
Wait, autonomous agents. So not just an alert, but the AI actually does the transaction.
Exactly. Based on programmed rules and machine learning, working capital also gets smarter, using smart contracts for things like dynamic discounting.
So the code handles the payment terms automatically. Like if you pay early, you get the discount, no emails needed.
Precisely. AI optimized payment routing, timing, bank relationships, think bot-managed liquidity lines, 247 automated FX trading.
Wow, 247 automated FX, that's a total game changer compared to calling a trading desk.
It absolutely is. Debt raising might involve tokenized bonds, basically, debt recorded on a blockchain, and AI matchmaking with investors, FX hedging, continuous agent-based, maybe using tokenized FX contracts, and the treasury management systems, the TMS platforms. They become self-learning, triggered by APIs.
So the TMS isn't just holding data, it's actively doing things based on triggers.
That's the idea. It initiates actions based on real-time data from other systems or agents. Compliance gets embedded via smart contracts and AI spotting anomalies. And the strategic role, it evolves again. You're running a treasury control tower, supervising this whole network of financial agents across the company. And the report flags a huge shift in tech skills needed, from basically none in the 90s to being familiar today to needing actual fluency by the 2030s. Things like prompt engineering, knowing how to talk to AI like a TreasuryGPT and API orchestration, making all these pieces work together.
That is quite the transformation. Okay, so thinking about that journey, spreadsheets to AI-Orchestrator, what does the person doing that head of Treasury job look like in the future? What backgrounds does the source point to?
It's definitely a shift from the traditional path. The source contrasts the typical 90s to 2020s profile. Usually someone with a solid finance background, right? A CA, CPA, maybe an MBA in finance. Their skills were deep in cash, debt, bank relationships. Tools were Excel, Bloomberg. The future path, though, for the 2030s. The report suggests more of a dual expertise. someone combining finance and technology, maybe an MBA plus data science or engineering,
Interesting. So less purely finance.
potentially. The key skill set looks very different. API architecture, really understanding how software connects, designing treasury automation, supervising AI agents, getting smart contracts, and the tools, not just Bloomberg. Things like TreasuryGPT, DLT, no-code, low-code platforms for automation, real-time analytics, blockchain settlement tools. It's a different toolkit.
It really does sound like Treasury leadership could end up looking more like running a fintech product team. Why does the source think future Treasury heads might increasingly have these tech backgrounds? What's the driving force?
The report lays out a few key reasons, and they all point to this fundamental change. First, Treasury ops are just becoming mediated by code. It's less manual process, more data flow and logic that needs API knowledge and prompt fluency. Second, you've got these AI agents emerging. Someone needs to design them, manage them, supervise them. That needs comfort with logic, maybe some NLP APIs again.
Yeah, you need to understand how the agents think, essentially.
Exactly. Third, this move towards tokenized finance. That demands a real grasp of smart contracts, compliance as code, how these new instruments actually work on a technical level. Fourth, risk modeling. It's getting more complex, relying on real-time AI. A tech background helps you understand and guide that. And finally, just the sheer volume of data. Treasury's drowning in real-time feeds. You need the skills to handle that, interpret it, build systems around it. What's really striking, I think, is how these reasons all connect. It's not just layering tech onto the old job. The core work is changing. It's less about executing financial processes yourself and more about designing and managing the tech systems that do it. That builder mindset from tech becomes really important.
Okay, that makes a lot of sense, the shift from doing the process to building the system.
Hmm.
With all this new tech, are we seeing brand new roles popping up within Treasury teams, not just at the leadership level?
Oh, definitely. The source identifies several specific emerging roles, all driven by this tech shift and needing unique skills, like the AI Treasury Ops Manager.
What do they do?
They basically oversee the AI agents handling day-to-day liquidity, cash, FX. They need skills in prompt engineering for the AI, monitoring tools, understanding the workflow APIs, connecting everything.
So managing smart software instead of people pushing buttons? Got it. What else?
Then there's the digital debt structuring lead. This person designs things like smart bonds, manages platforms for tokenized assets, needs DLT knowledge, fintech API skills for capital markets, maybe even some basic blockchain scripting. There's also the liquidity intelligence analyst. They use models to predict cash flow, automate positioning. This needs data skills. Python, SQL are mentioned, scenario modeling, building real-time dashboards.
Python and SQL in Treasury. That's definitely new ground for a lot of finance folks.
It is. And one more. The RegTech Treasury analyst, they focus on compliance audits, often using AI to detect anomalies. Needs familiarity with AI alerts, smart compliance rules, GRC tech platforms.
It paints a picture of a much more tech-diverse Treasury team. Okay, so if you're working in Treasury now or aiming that way, what practical skills does the source say you absolutely have to focus on building?
Yeah, the report is pretty direct here. First, getting comfortable with data tools like Python and SQL is becoming key. Not necessarily to be a pro developer, but enough to maybe tweak models for FX or cash forecasting or understand what the data scientists are doing.
Right, so you can actually work with the models, not just consume the output.
Exactly. Second, API orchestration. Understanding how to link your TMS, ERP, bank portals, trading tools via APIs, and manage those automated flows is crucial. Third, prompt engineering. Learning how to effectively instruct AI tools like a potential TreasuryGPT to get them to do what you need for analysis or execution.
Basically, learning the language that AI understands. Makes sense.
Yes. Fourth, smart contract basics. Again, maybe not writing them from scratch, but understanding how they work, how compliance gets baked in, their role in new instruments. And finally, getting hands-on mastery of the specific Treasury AI tools that emerge as standards, whether it's from Travada, G-Treasury, SAP, or others. You need to know the tools of the trade. And, this brings up a really important point the source touches on. How fast can finance professionals without that deep tech background realistically pick up these skills? It's potentially a steep learning curve.
It really sounds like it. Thinking bigger picture now, beyond individual, how does all this change impact the whole Treasury Department and maybe the wider company?
The organizational ripple effects are pretty significant, according to the source. First, hiring. It shifts focus. Companies won't just look for finance credentials. They'll need hybrid tech finance profiles, people comfortable crossing disciplines.
So maybe hiring data scientists or engineers directly into Treasury.
Could be. The org structure itself might change too. The report hints Treasury might evolve from just reporting to the CFO into more of a strategic Treasury AI command center, possibly with wider operational influence. Collaboration definitely has to deepen. It's not just finance and risk anymore. You need tight loops with IT, data science, product development, especially for tokenization, and legal for smart contracts. And finally, succession planning gets turned on its head. It becomes less about finance tenure and more about tech adaptability, automation mindset, systems thinking. Who can lead this new kind of team?
That requires a totally different way of thinking about career paths in Treasury. Are there companies the source points to that are already kind of doing this, leading the charge? Any benchmarks?
Yeah, the source gives a few examples of firms already embracing parts of this. JP Morgan Chase gets mentioned for using AI bots for intraday cash optimization, really squeezing efficiency out of daily cash flows. Apple is noted for having its own internal TMS development team, deeply integrated with ERP and forecasting, showing that strong in-house tech focus.
Right, building their own tools.
Exactly. Stripe, being tech native, is highlighted for automated treasury, using AI agent orchestration via APIs, treating treasury like another system to automate. And the vendor Travada is mentioned specifically for framing treasury management as code-driven workflows, enabling that real-time interaction.
Those examples help make it feel more real. Okay, so for the leaders listening or people who want to be leaders in this space, what concrete steps does the source recommend taking now to get ready?
The report offers a pretty practical action plan. First step, identify your talent gaps. Do a skills audit. Where are the tech, data, automation skills missing in your team right now? Second, actively partner with tech. Don't wait for them to come to you. Go co-design AI workflows, build those compliance engines together.
Be proactive.
Definitely. Third, set up AI agent sandboxes. Create safe test environments to experiment with Treasury AI agents. See how they work. Train them on your data. Fourth, invest in team training, specifically on prompt engineering and maybe basic scripting for these AI tools. Upskill your current people. And finally, adopt a modular TMS strategy. Use APIs to connect everything flexibly, your core TMS, ERP, hedging tools, forecast models, bank connections. Build an ecosystem, not a monolith.
Okay, that sounds like a solid plan.
So yeah, wrapping it up, the big message from this deep dive is pretty clear. The future of Treasury isn't just strategic, it's deeply technological. It's about blending that core finance knowledge with real tech fluency and an automation-first approach.
It really is a profound shift, moving from being, a financial steward managing what's there to being an architect, an orchestrator of these autonomous, predictive financial systems run by AI and code.
And the source is pretty blunt. The most successful treasurers going forward will be these architects. So, maybe a final thought for everyone listening. If future Treasury leaders are architects of autonomous predictive financial ecosystems, what does that imply about the skills needed in any finance role soon? What kinds of automated systems, what AI agents might you be asked to help design, build, or manage whatever your specific job is?